Hello and season's greetings. We start the new year with a constructive outlook for Indian equities, though the journey might be marked with bouts of volatility. Global growth is expected to be better in 2020. Global crude oil prices and interest rates are expected to be favorable for India. On expectations of signing of the trade deals, certainty on Brexit, and a pickup in growth in major emerging economies as well as in the EU, 2020 is expected to have a global growth better than 2019. India too is also expected to start showing a pickup in growth in the year ahead. This is on account of the reasonable easing of financial conditions which have been carried out in the past many quarters. This includes liquidity, rate cuts, expectation of transmission of rate cuts, and a large jump in forex reserves. Additionally, infrastructure activities expected to continue apace. The rural system is also expected to do better in 2020. Corporate earnings and the quality of corporate earnings is also expected to improve in 2020. This will be driven in part by benign raw material prices, lower interest costs, improving corporate balance sheets, and a cut in corporate income tax rates. Additionally, over the previous years, reforms such as the GST, IBC, and the recent Supreme Court ruling on the IBC create a structural tailwind for the organized corporate sector as well as for the ease of doing business. While there is a slowdown currently, it comprises some sectors which are witnessing a cyclical downtick such as automobiles, and some others which are witnessing more a structural downturn such as real estate. Real estate in particular has been impacted by the combined effect of demonetization and RERA. However, in 2020, we expect some of these beaten down sectors to start picking up. Recent high frequency data from the country have been weak, and this might remain so for the immediate future. However, we expect Indian macros to be by and large stable in the year ahead. Risks can emerge from any issue within the domestic banking and financial system. However, we expect the authorities and policymakers to be preemptive in this regard. 2020 is also an election year in the US. This, along with how the data on economy flows out from India, can have a bearing and cause volatility in this year 2020. However, we would like to keep a firm eye on the long-term structural drivers for the Indian system. This include a favorable demographics and a rise in a lot of a high percentage of households from the current income level brackets to the next one. This, along with the continued investments in infrastructure and in technology adoption, are expected to improve productivity and growth rates for the Indian system. In the short term, there will be a lot of news flow, but we think it is better to ignore a lot of it and to keep our investment horizons and investment allocations intact. By keeping away from this fear or frightfully exaggerated assumptions of reality, we think investors will be able to enjoy from this asset class and benefit from the power of compounding. Thank you and a happy new year.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.